Welcome to the Techno Fundamental Report for February 22nd. No strategy is perfect. There's always going to be what we would say miscalculations, or you could call it just a miss. But, certain indicators I keep an eye on that really make sense. They've got to make sense. And so if you think about the institutional market, which this big foot represents an institutional investor. They're big. They manage billions of dollars, if not trillions of dollars. And as a result, bigness becomes a disadvantage because they can no longer be as flexible as an individual investor, such as ourselves, because they can't go to cash. They can't move their portfolio around as they would like. So what happens when institutions start sensing problems in the economy or in the market, they start moving their capital into things like consumer staples or utilities or anything that's defensive. So this particular indicator, I just want to focus on it here for a minute, is the aggression index. Well, we talk about this every week, but the bottom line is that once that index, this particular calculation, and the way I have it set up is I'm dividing the NASDAQ by the consumer staples fund, which is a fund of consumer staple stocks. And so when the institutions start to move out of aggressive positions, you can see it in this indicator. It is an early warning is what it boils down to. And so you can see at this time we're in pretty good shape. So let's take it another step. Let's go back in time a little bit. This is currently, though, right here. Now, what I've done instead here is I'm taking the consumer staples and flipping the calculation, but then I'm dividing it by the Standard & Poor's 500. So what I'm looking at here is when the line's going down, it means that the consumer staples are underperforming the S&P 500, which is a positive sign because it means that these institutions are not looking for defensive, they're looking for aggressive. Now, if you break down the consumer staples, you can see here tobacco, household products, food products. These are companies that are very stable. Their earnings are very predictable. They're very calculatable. So the point I'm making is that if you go and look at like 2008, this was the financial crisis. Now you can see what's happening with the line here. Remember now, as the line goes up, it's telling you that the consumer staples are starting to outperform the S&P 500. So if we just jump back real quickly, this line looks like this. Going into the '08 financial crisis, the line looks like this. So I'm just saying that the market continues to look bullish. Now, I just wanted to take a snapshot of gold real quick, and what I'm doing here is I'm dividing gold by the S&P 500, and you can see that gold is underperforming. So if gold is a measure of inflation, it's telling you that gold is not really outperforming. Therefore, is the inflation problem eventually going to go away? Well, we'll have to see. So let's just look at the indexes real quick. You can see here with the NASDAQ, we got a pullback in here. We're still holding above that 25-day moving average, and we're looking fine here. Now on the S&P, same thing. We're above this moving average, and we are in an uptrend. Then if we look at the 200-day, you can see that the 200-day continues to be in an uptrend. The market's in an uptrend. The primary trend is up. Now, continuing to monitor interest rates with the power index. This is another indicator that we have back tested and feel strongly about. And you can see here, even with interest rates moving up, the power index is continuing to stay flat. So it's telling you that because you're factoring in time, in other words, we're looking at the rate of change of interest rates. We're not just looking at where they are today. We're looking at what's the rate of change. And right now, the rate of change is below zero, telling us that interest rates are not really a big problem right now. Could be next week. Also, I wanted to just show some more moving averages. This is the weekly moving average. This is the 30, the 40, and 50 week, and you just kind of see how smooth the S&P 500 moving averages look. This is very positive. This is like back here. You can see during that good year we had in 21, you can see how smooth that looks. So it looks positive. So I wanted to just take some stocks as examples just to kind of look at how we break this thing down. I've been using stock charts for decades, very long time, and over time you develop something called a chart eye. Well, I can look at a chart and probably tell you in a matter of seconds whether or not I'm interested as an investor in that particular security. So if you look at this one, this is automatic data processing. This is what we call a flat base, and so this is what you would refer to as a setup. Then you get what we call a volume signature, where you get a way above average volume, and you get a gap up in the stock price, which is telling you those big investors are coming into this thing. So again, we're having another setup, so we will continue to watch. Now, what these stocks are, these are stocks that I don't necessarily own these stocks in our fund, but they are on our watch list. So here's Academy Sports. We've been in this stock. We've kind of found it frustrating. Retail can be frustrating, but as you can see here, we continue to have a nice flat base. You kind of got a little bit of a breakout here. Again, you're getting a flat base. Also, remember, we've got the trend meter up here. And the way I usually look at a chart, the first thing I'll do is I'll say, okay, trend meter's in the green, stock's in an uptrend, got a setup, and then I'm looking for volume signatures, and then also this is a relative strength line down here comparing Academy Sports to the S&P 500, and you want that to be in a strong uptrend. This is somewhat sideways. However, it looks good. American Express, this has been a real shocker, for a financial. We're starting to see names other than technology. That's kind of a rotation of the market. It's a change of character, in fact. So again, we want to look at American Express. We're in the green here. Relative strength does appear to be in somewhat of an uptrend. You got your volume signature here. You got the gap up. Very positive looking pattern. Now, this is one we talked about last week. I just wanted to make a point. I don't know why the stock dropped so much yesterday. I think it's because they're getting ready to announce earnings on the 27th. And I think, maybe there's a bad report coming. I don't know. But the stock really broke down. So this is something we also want to talk about, because this is somewhat of a sell signal. In other words, we were watching the stock and we were saying, okay, we want to see this basing pattern and then get a confirmation with a breakout. But it was exactly the opposite. So, I had a good friend contact me and say, before you buy Kava, you want to go there and eat. And I have to tell you, I did go there to eat last Friday, and I was somewhat disappointed. The food was not what I was expecting. Here's CrowdStrike. Now, CrowdStrike got hit yesterday because of the news on Palo Alto. They missed their revenue number. Also, they gave a weak guidance. So you can again see where you kind of have the uptrend going here. Now, to me, the violation comes in on this stock if it breaks below this low of 273. So you want to watch this one. If it breaks below 273, that would be somewhat of a sell signal. Fastenal. So we're starting to see industrial names. So we're seeing retail names, industrial names, financial names, starting to see the character of the market somewhat changing. Again, though, we can see that we're in the green here. Relative strength is positive, and you've got a gap up buy signal with a volume signature. So this looks good. Nice setup. Should be watched. Also, I like the fact that it's tightened up. The trading is not real wide and loose. It's tight. That tells you that the buyers and the sellers have kind of reached parity. So the question now is, are the buyers going to take over or are the sellers going to take over? So if you have any questions, let me know. Thank you very much.